What's going on, everyone? It's February 10th. I don't know why I'm smiling. Rates are moving up, and that's really the purpose of this video, is to walk you through what's happened because it's catching everyone off guard. We had rates so low for so long, and now we're seeing them start to increase, and we're not seeing them increase, they are going up quickly. Big reason for this is going to be that the Federal Reserve in March of 2020 stepped in to stabilize the market due to COVID, due to the pandemic. They stepped in and started investing in mortgage bonds and treasuries. They announced that they were going to stop doing that. They made the announcement in September, October of last year, stating, hey, come November, we're going to start to taper back on how much of these we buy. Well, that news alone would cause interest rates to rise because the Federal Reserve is no longer backstopping them. So that's when we started to see rates rise, was kind of end of November going into December. Now, it wasn't dramatic at that point. Then we have inflation. Inflation sitting around 7.5% as of today. That is a 40-year high. So we're seeing everything adjust so quickly, and rates are following along with that. So let me show you the charts because I always want to give you context and detail when we're talking about these things. Okay, we were looking at mortgage bonds trading here. This is today. Today's been awful for mortgage rates. Basically, we've seen 100 basis points in movement in the market. And when you see that much movement, I would say 50 basis points equates to about a 0.25% change in interest rate. So this in itself, just today, could equate to a 0.5% change. And if we look at, well, where are these horrible red sticks that are about the same size? We had that February 4th. We had it January 26th. We had it January 19th. Now these two, like from here to here, there's very little change because we were staying in this range. But then if we couple that with what we saw the 14th and 18th, so this was a Friday and this was a Tuesday, you have 102.61 down to 1. There's 100 basis points just in 2 days. So what we're seeing there, and this is not a perfect science, this is just kind of what I typically see. It does not follow exact to this, but basically if 50 basis points worsening in mortgage bonds equates to about a quarter increase in interest rates, just from January 14th and January 18th, that in itself could be a 0.5% increase in interest rates. And then what we're seeing from today is probably another 0.5%. Now, days like today when it's really volatile, the banks get scared and we see them pull back. So mortgage rate quotes today may not be indicative of the market because they're adding in that fear. They're hedging, right? Like, whoa, we don't know where things are going. This is a scary day. Let's push rates a little bit higher just to kind of see how things play out. So we do need to see how things play out in the next couple of weeks. We know the Fed is going to increase interest rates in March. Now, everyone thinks that when the Fed increases interest rates, that means mortgage rates. That's not the case. The Federal Reserve is going to increase the prime rate most likely by 0.25% next month. And since we already know it's coming, the market has already reacted. And that's a lot of what we're seeing. So we have the Fed pulling out of buying mortgage bonds and treasuries. They're not pulling out, but tapering back, easing up on how much they purchase. We have 7.5% inflation, and we have Fed rate hikes coming up this year. So the market is already adjusted for all of these factors, and that's why we're seeing the adjustment happen so quickly, is because all this news is hitting at the same time. We have all this happening at once. And so what I said when we got into this, so back in February of 2020, or I guess it was March of 2020, I didn't want to see rates go super low like that because I said it'll become our new normal. Mentally, we'll think that hearing a 2, hearing a 3 is a normal thing. 4 will seem like an insanely high interest rate. The reality is in 2019, interest rates were sitting around 4%. So all that's happened here is we've gotten back to the same levels we were pre-pandemic. It just happened over the course of like 6 weeks. So we had 2 years of calm seas. And now in just 6 weeks, we've gone right back to where we were pre-pandemic. So what does this mean for you if you're trying to buy a home? It means you need to get your pre-approvals updated. You want to make sure your pre-approvals are based on the most accurate information possible. So I would say that is a number one thing, whether you're working with me or a different lender. Hey, I just saw this video. Where are interest rates sitting? That's number one. Number two, don't let this be a reason that stops you from buying a house. Remember that the interest rate is a means to an end. The house is the important piece of this puzzle. That is the asset that you're going to be making money on over time. Now, if interest rates go back down, you just refinance. So we did that a ton. When the Federal Reserve stepped in March of 2020 and stabilized interest rates at that point, which then brought them even lower. People who had bought homes in, say December, January 2019, 2020, in those early parts, they were refinancing immediately. There's typically not a prepayment penalty on a mortgage. So if rates improve when we come out of this, wonderful, we'll refinance. Get the house. That's the important piece of this puzzle. Of course, interest rate is going to help to determine affordability. But this is why I keep saying that the rate matters more than the price of the home. These rate increases we're seeing will impact your monthly payment more than, should I bump up $50,000 in price or $100,000 in price going over ask. These concerns we have, the interest rate's more important. So comment below, reach out anytime. There's just a lot happening really quickly, and I want to make sure it all makes sense to you guys. Thanks so much for watching, and I'll talk to you soon. Cheers.